I got beef with two people in my Patreon, you hear me? And I'm real cool with them. I feel like we homies, right? I feel like we homies, right? But Jermaine and Davian, right? I got beef with them because they be going strike. They know we supposed to be riders, but they be going strike without me, right? Like, I don't be mad at AB because he be going hit little quick licks for a date. Pop, he be gone, right? AB go hit a lick, pop, 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 he gone. But Jermaine and Davian, they supposed to be my dogs. They pull up in the car, they go. I be like, hey, what's up? I don't even give me a chance to get out the car. They be gone. Then they come back like, yeah, we got the money. I'm like, bro, why y'all got the money without me? We're tiptoeing on marble floors. You know what I'm saying? The reason why I say is because, listen, 60% of the S&P 500 stocks are at a 20-day note high. Good signal for the next month. So one of the things I do when I'm looking at charts and I'm looking at stuff, I like for mine to be above the 20-day because that means the market is actually in a bullish pattern. I mean, the market is trending upward, so I look for that all the time. So watch this. Anytime coming off the lows and the market, 60% of the market is above the, watch this, above, and the reason why we like to talk data is because data is what we use to keep us where we at. So watch this. In 1982, 60% of the market was above the 20-day high, 6 months, 15%. Watch this. 12 months, 27% return. Watch this. In 2022, when 61% of the market was above that, in that 6 months range, they had 4%. They followed that with another 11%. Watch this. December 2023, 61% of the market was above the 20-day high. You had a 15.2% for the first 6 months, and they followed that by 31%. On average, it's been 9% with a return of 18%. Watch this. The median is 10% with an average return of 16%. 83% of the time for the 6 month, it was positive. 100% of the time after that, it was positive. In 1991, 1.6%, minus 1.1%. In March 2010, minus 4.3%. In July 2011, but all years it ended up positive, above the 20-day. How we feel about that, Sean?
For those who don't know, like you probably saying 20-day, like what the heck is a 20-day? Can you like do a simple explanation of like what a 20-day is?
So it's just basically where has the market been trading the last 20 days? The average of the last 20 days, is the market below or under that? Does that make sense?
Yeah,
right.
If you could explain it, so like for example, that line on your chart where it does that,
Yeah.
is that what you're talking about?
Yep. So like this a moving average. So like I use moving averages. So there's the most common moving averages is the 50, 100, 200. 20 day is probably for traders for sure. You know what I'm saying? To see if the market still is in that upward trend, right? So if it falls below that 20 and that 50 day, you know it's not in an upward trend. It's probably in a downward trend. So if it's above the 20 day, you know it's still in that upward trend. So that 20-day moving average means the market is still actually, and so that's kind of one of the things we talked about was when you think about the overall picture of the market, where is it? Where is the overall trend going, right? And so if it's above that 20-day, you know that we still in that. Actually, if it's above the 20-day, it's kind of a strong upward because I mean it's top heavy, right? So right now you think about it, you got 60% of the market right now is above its 20-day moving average. That ain't bad. Or that 5-day, or you talking gangster talk right there. That 5-day, you talking real gangster right now. All right, so watch this. Let's just check where the moves is at, right? So we talking about right now the S&P is positive. The S&P is positive right now. Let's just put that into perspective. Of everything that we've been through, the S&P is positive right now. That is insane. Year to date, communication services is up. Consumer discretionary is down. Consumer staples is up. Energy is down. Financials is up, which is where I've been at. Not gonna lie. Goldman Sachs, IBKR, you know what I'm saying? Healthcare is down. Industrials is up. Materials is up. Real estate, technology, utilities. These things are up right now, man. So think about it. Out of 11 sectors, you kind of got 3 sectors that's down. Healthcare is down big. You got consumer discretionary and energy down a little bit, but other than that, communication services, that shit. It's crazy how Amazon and Meta falls up in there. Financials, Goldman Sachs, Berkshire Hathaway, Visa. It's kind of where we at. Industrials, my Fastenal. So just a temperature check on where the market is as of right now. Let's go a little further. So I always think that there's always a advantage if you buy companies that corner the market. The advantage in that is those companies will often outperform. The disadvantage is in that it's a good chance that the government is going to try to break them up or they're going to get constantly sued. If you look at all of these companies, they've all been almost sued except for DaVita. From FICO, FICO had to fight for a minute. Shout out to Long Lee and the group. He said, ever since Trap kicked FICO out of the Freedom Fund, they've been fighting to get back. And I ain't gonna lie, they've been looking good too, dog. I've been looking. I've been paying attention. Sometimes you gotta kick them out. Then you gotta get their act together. You ain't got to go, but you gotta get up out of here. Get your act together. If you don't know who DaVita is, it's like a dialysis place, yo. Top tier. It's one of my sleepers. Yeah, I like to go with companies that will, that hold a chokehold in the market. You kind of can't go wrong with them. You hear me? Let's go a little further, man. We was talking earlier about a lot of companies just knocking it out the park with technology, and that's not the case. You have some outliers, which are companies like this. Palantir up 64% this year. Meli, M-E-L-I, which is supposed to be, I think they call it like the Latino Amazon, not Amazon, like communications, what it is in technology. It's supposed to have the impact of like Amazon. MSTR. It's crazy how that stock fought back though. MSTR, what you looking at? That Michael Libre?
Yeah, that thing.
No, it's what, $1,000, $1,200?
It's 25.
2,500?
Yeah.
Yeah, I know it was like 1,000 last year. Yeah, that's crazy. It's crazy how MSTR fought back, bro, because it took such a big hit. It skyrocketed late last year, then it bottomed out, then it just flew out the gate. Zscaler, I talked about them being a sleeper a while back. Y'all know Netflix. Well, my Patreon people who've been with me for a year, KLAC. Look at this. I started to say something crazy here. I'm about to say something. All my Patreon people, y'all know how. There's a couple companies that we feel. Let me be real with you. There's a couple companies that we in the Patreon feel some kind of way about. One of the companies is KLAC. Right? We feel some kind of way about this company here. Right? We feel some kind of way. We feel some kind of way about this company right here. And the reason why, because it took off and then it just went the other way and never came back. Like it went to hell. Right? So we don't like them like that. Wingstop. Right? We was up 25% on Wingstop and then it just It didn't tell us nothing. It didn't miss earnings. It didn't miss revenue. It didn't do. It just went the other way for no reason, right? ServiceNow, we finally feeling a little bit better about it, but it did us the same thing, right? And Eli Lilly, right? Like we made so much money off Eli Lilly, but for some reason Eli Lilly just punched us in the face for some reason, right? So we feel some kind of way about that. We gonna let waste management, we gonna always say don't let them breathe. Now they say don't let them. Yeah, we feel some kind of way. We feel some kind of way. We feel some kind of way about KLLC, KLAC, Wingstop. Yeah. ServiceNow, Lilly. Yeah, we feel some kind of way about them, right? Because they ain't had no business doing what the hell they did, right? They was doing good, and then they just turn around with no regard, with a total disdain for how much money we had in them. Right? Sheer, unmitigated gall to just turn around on us like that. After being up. Like, real talk, like, they was up. We was like, yeah. And then they just turned for no reason. No missed earnings. And the reason why we mad, because we can't justify what happened.
Nah, that'd be the worst. When you lose money.
Yeah, like we can't even justify what happened. You just went the other way for no reason. No news, no nothing. You just decided one day that you did not want us to make money on you. Man, flush them companies. Flush them down. Flush them down. Flush them. We don't like that shit. Like that. I got beef with 2 people in my Patreon, you hear me? And I'm real cool with them. I feel like we homies, right? I feel like we homies, right? But Jermaine and Davian, right? I got beef with them because they be going strike. They know we supposed to be riders, but they be going strike without me, right? Like I don't be mad at AB because he be going hit little quick licks for a date. Pop, he be gone, right? AB go hit a lick, pop, 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 he gone. But Jermaine and Thavian, they supposed to be my dogs. They pull up in the car, they go. I be like, hey, what's up? I don't even give me a chance to get out the car. They be gone. Then they come back like, yeah, we got the money. I'm like, bro, why y'all got the money without me? So I told them next time they go get the money without me, strap up.